let's be clear, Bitcoin is an international asset.
We are spending like drunken sailors.
Bitcoin is the only economic entity where the supply is unaffected by the demand.
If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable.
Okay, welcome back to Scarce Assets. We have an interesting conversation lined up today because we are joined by Bob Griffin, who is the founder of CactusPEAK Digital and a principal at 21 Peaks. And I'm also joined by Michael Tanguma, who's the CEO of Onramp, as my co-host today. Gentlemen, nice to see you both. Bob, thank you for joining. How are you guys doing today?
Doing great.
Thanks for having us, Jackson. Thank you. Appreciate it.
I'm excited to join Scarce Assets. The show's been running for over a year, and it's my first time joining, so excited for the conversation.
Yeah, you managed to weasel your way into another Onramp podcast, Michael.
Yeah.
And so, Bob, I know we talked about this offline, but you said you weren't going to do this interview unless people rated the show 5 stars.
That's exactly right.
Okay, so I just want to make sure everyone heard that. Unless we get some 5-star ratings on your favorite podcast player and you like and comment on the YouTube, Bob wasn't going to do the interview. So, Bob, appreciate you carving out the time. Hopefully the other side honors that request for you.
Or individuals like Bob. Bob and us and our team connected, and Bob has a fascinating background on what he's working on pre in the digital asset space and then post in the middle of it. And anybody that's been close to the industry with this new administration seen just the amount of traction and energy that's been focused on it and trying to figure out what are the products, services, and how do they educate their client base. So super excited and grateful for Bob to join, and I think it's going to be an interesting conversation. You generally know they're going to be interesting when you get off calls and they're really fascinating from a personal perspective. And then you're like, well, shit, maybe the market should be able to hear it as well. So pumped for this one.
Yeah, absolutely. And so thanks again, Bob. Maybe just to tee things up before handing the mic over to you. So you have over 20 years combined in traditional finance and digital asset experience. I think you had mentioned about 17 years in traditional finance, a lot on the institutional allocator side as well.
Yeah.
And so really excited to dive into your background and what we're seeing, because something we've talked about on the show is that Bitcoin and digital assets really are only, say, about a year into true institutional adoption. It was really hard. There were virtually no investment solutions for allocators to get access prior to the ETFs. The ETFs have changed things. And then, of course, now with a change of tune with the Trump administration, more regulatory clarity, it's a totally different environment. So maybe just a level set, Bob, could you walk us through your background over the past 20 or so years? You know, what were some of the key highlights? What was the path that you took that ultimately led you to the space that you're in now?
Yeah, it's a great question. And I again, thank you for having me on the show. This is fun. And, hopefully we can have, a really good dialogue here. By way of level setting, as you mentioned, I've been in the traditional space for a very long time. I entered the space kind of late in my career. I think I was 30 when I first joined an investment bank in Chicago. And I was lucky enough that this particular investment bank, they didn't want to hire existing finance folks because they felt that a lot of finance people coming out of, New York schools and the Ivies were not trained properly, ironically enough. And so they wanted kind of a blank slate. And so I joined that firm, middle market broker dealer, investment bank in Chicago. And, I was born and died in fixed income. That's where I sort of cut my teeth. And from there, it was an interesting transition. We went from, a long time ago. Back in the day, we would have, bonds for sale, basically. And there was a bond of the day. And we as salespeople would just take this bond and pound the phones and get anybody and everybody to look at it and buy it, right? And that was a really inefficient way to build a portfolio, right? Because we weren't selling things that could potentially impact the end buyer. we were doing it in a way that made us the most money. So the alignment of interest was really sort of messed up. While I was there, and this was pretty groundbreaking, I would say, we decided collectively to focus on the end user and build a platform by where we could take in their portfolio and their structure and their allocation and actually sell them things that matter into the portfolio. And that way it was sort of a friendly relationship that added alpha to what they were doing on their end. Plus, we got to make a little money doing it as well. That turned into me leaving and going to a large pension fund. So when I was at the investment bank, I helped a pension build a fairly substantial book of business. And so I went to that pension, ended up managing those assets. I think at the height of that was close to $1 billion. I think we hit, I don't know, I hit 950 million in that portfolio. And those were assets really earmarked for illiquid investments that we were deploying in private equity, infrastructure, VC investments, and things like that. And so from there, while I was at the pension fund, we would hire outside managers to manage lots of different strategies, as you can imagine. I mean, we were 10 billion, I think, at the time. As a result of that, I went and joined Janus Henderson, which is in Denver, and I was part of their fixed income team. Spent 6 or 7 years with them. Traveled all over the world with Janus Henderson, and met with some of the largest, if not the largest, allocators globally, and that was a super fun experience. And at this point, I'm 17 years into my finance career, and through a merger, my number was up, and I get let go, and so I'm at an inflection point right in my career, and I don't have a great taste in my mouth from traditional finance. I mean, it's enough that I'm considering leaving TradFi at this point. And at about the same time, I'm having coffee with somebody in Denver, and I hear this conversation about Bitcoin behind me. And it sort of jogs this thing in my head. And I'm like, I got to call Buddy who's in Bitcoin. And I did. I didn't even leave the coffee shop. I called him directly from the coffee shop. We ended up having a 2.5 hour conversation, I think it was, about Bitcoin. They had just launched a digital assets hedge fund. I knew nothing about Bitcoin. I knew a little bit about Bitcoin. I had kind of followed it since 2017 or so. And long story short, I ended up joining the hedge fund in July of 2019. And that's where my Bitcoin and crypto experience launched. And I've been in the space ever since. And so I'll stop there and see if you guys have any follow-up questions.
Yeah, thank you, Bob. Appreciate you running through that. I'm curious, what were they discussing at that coffee shop that got you to pick up the phone and call somebody about Bitcoin?
Yeah, and I wish I would have met the guy. But it was a guy that was totally a Bitcoiner. He, from my naive perspective, he really understood Bitcoin. Again, I wish I could go revisit that conversation in detail so I would know exactly what he was saying. But he was pitching a couple on owning Bitcoin. And I don't know if he had a fund. I don't know if he represented, some exchange. I have no idea what the context was. But it was just this very active, sort of engaging discussion around Bitcoin. And again, it was enough to jog my memory to my buddy, who is now a partner of mine at the hedge fund. And, we've been together ever since. So, it was just one of those random things where Bitcoin was being talked about in public. And
do you remember the coffee shop?
It was downtown Denver. I don't remember the name. We were sitting outside. So it was a beautiful spring day. And we were sitting outside, enjoying coffee, in the spring as you can in Denver. So
yeah. Well, maybe somebody listening there, realistically there's only so many of us that are out sitting, at coffee shops, trying to educate individuals, especially back in 2019. But also Denver's just turned into a big hotbed of activity in the Bitcoin space. My previous firm and this firm, I had a lot of colleagues that lived there, and there's the new Denver Bitcoin space. So there's probably somebody that's tied to that network that was out there. But it also was interesting because we were talking internally about most people's hit rate on educating or getting somebody to see what you heard is non-existent, like maybe 1 to 2 conversions, right? And so it really ties into, you can't really explain this stuff to, or like really get somebody past peak interest unless they're ready. Like they just have to, from a social, economic, or life position where they have the time to just think a little bit deeper around it. Because you can imagine being at the pension firm or another firm you were at, hearing that conversation means nothing because you're so busy thinking about all the things you have to do in your day to day, but you had some space to breathe. So I always find that interesting. And I'm curious, like there was something I felt that was insinuated in the fact that you didn't jump into TradFi until 30. So curious, like what you're doing before then, and then what were the good and bad parts of the pension experience? Because I feel like that's that primed you for that moment to be able to hear like, well, crap, maybe this is something interesting because everything else before this wasn't as interesting.
Yeah, I have a really interesting path. So we'll talk about 30 and prior, and then we'll jump into your other question there. I grew up going to a Christian camp in upstate New York as a high schooler and as a college student, and I worked in, I guess it was 8 summers. I worked in their kitchen, and I learned how to cook basically. And even though I was getting a business degree, I was up in the mountains of upstate New York, loved it. And when I graduated from college, they offered me a job. And here I am, a single guy, love the mountains, love being outdoors, and I jumped on it. And I actually became a chef. So I went through the American Culinary Federation's apprenticeship program and ended up managing an inn in upstate New York. And I spent the better part of my 20s running a business, frankly. And I think that experience was invaluable. I didn't know enough to be scared, right? You're in your 20s. And so I just went for it. And, it taught me a lot about business, about being a human being, about taking care of others, about communication. And there was a lot of satisfaction in taking care of people on vacation and giving them a good experience. I don't know if I'm going to answer this question, Michael, perfectly, so correct me if I'm wrong. But in terms of the institutional side, what I wanted to share is that what I was taught early on was, and I'm a curious person by nature, so I think that helps. But when we were at the pension fund, institutional investments, pensions, endowments, that side of the institutional space, it tends to be very copycat, right? If you've got a couple thought leaders in the space, they do something, everybody follows. And so we were challenged, and our job was to go out literally globally and find unique and differentiated sources of alpha that the whole world was not participating in yet. And so, when I was challenged post the coffee shop meeting, and I talked to my buddy who was in Bitcoin, and he's like, I'll teach you everything you need to know. I took it upon myself to take a break and spend time. My wife thought I was crazy, by the way. And I spent the better part of 5 months studying Bitcoin. And so it was that process, I think that I learned in the institutional space that gave me, not only did I take a breath myself, but it was the curiosity and that search for new and unique differentiating strategies that I grew up with at the pension fund that led me to Bitcoin. And I think you're exactly right, Michael. I was open, and I was just enough jaded from Wall Street that there had to be a better paradigm, and that, I believe, Bitcoin is that new paradigm.
Yeah, it's super fascinating. I mean, being in this space for a while and talking to individuals, that 2020 moment was a lot for folks similar to yourself. And they usually liken it to the amount of dollars that were printed and all the different stimulus that hit the market. But the reality was, it was because they had time because everyone got locked in a quasi box. And so it was really the fact that they could jump off that And then the other aspect that you referenced as being invaluable is really important, I think, where institutional investors and traditional like TradFi has been so lost in the sauce of crypto versus Bitcoin is you had to run a business. You had to touch the inputs and outputs. When you run a restaurant, it's the most dynamic. My wife was in hospitality, works with restaurants, so we kind of know like how much they feel the pain specifically today when it comes to inflation. And so that like intertwined is in your understanding of just like closest to the market. So independent of going to the pensions, you still had that there, where most people leave college, go directly into TradFi, go to the world that you are in. And so they never can like empathize with the end state of the market and that there's a true problem underlying. So it's super fascinating to hear.
I'll tell you one other thing. You know what's interesting, and I'm going to make light of this to some degree, but this is sincere on the other side of the coin, which is when you're an allocator of large pools of capital, you have to pay attention to the Fed, right? And there's a meme, don't fight the Fed. And we used to say this all the time, right? You know, when we're making an investment, how close to the money spigot is it, right? Because if the closer you are to the money spigot, the better that investment is going to do. And that meme kind of has some truth to it. And it's sort of a sad reality. And so, you know, when I was looking at Bitcoin and trying to understand it, I'm like, man, this is a paradigm shift, because now you have an open, distributed, you know, free market asset that could disintermediate a lot of those barriers to entry for Wall Street. And that's why I think it was so interesting. And you know, it's available to anybody with a smartphone and a Wi-Fi, right? And so I think that's still a big misunderstanding on Wall Street. Wall Street's about creating new products and putting people into new products, right? Well, Bitcoin is the product. You don't need special access from Wall Street to get Bitcoin. And I think, you know, we're early days of people understanding that narrative.
Bob, can you walk us through a bit in terms of 2019 to present, just in terms of how your understanding of Bitcoin compared to the broader digital asset space has evolved over time? Because I know there's going to be people listening out there who are still trying to discern, how does Bitcoin stand alone from the rest of the digital asset space? And then I think one of the big challenges that exists as we think about institutional adoption of Bitcoin is, to your point, Wall Street is always looking to create product, right? And so there's an extent to how much product you can create around Bitcoin. So naturally, these other products get developed around other cryptocurrencies or digital assets, however you want to categorize them. So I'd be curious to hear how your understanding and thought process has evolved over time, Bitcoin versus digital assets, and then how should other allocators that are listening to this show maybe learn from your journey?
Yeah, Jackson, great question. And I will admit, you know, my philosophy around crypto, non-Bitcoin, is still evolving. So let me kind of give you my trajectory. Started with Bitcoin as well, I guess that's not a fair statement. I guess it doesn't always start with Bitcoin for people, but for me in particular, it started with Bitcoin. Again, I thought this was a massive paradigm shift in finance. And again, I have to say this, it wasn't because of price go up. It was because of its ability to disrupt Wall Street. And so with that vein in mind, and seeing firsthand how inefficient and frankly broken Wall Street is, you know, most of Wall Street is using 40-year-old tech, that it was ripe for disruption. And, you know, Bitcoin is not necessarily built for speed. And, in my sort of path thinking beyond Bitcoin, I thought, Bitcoin is going to be a really important dynamic in this new financial paradigm, but there are probably going to be other solutions that emerge, other protocols that emerge that can do things in a more efficient manner on Wall Street. And so I started to sort of research this narrative, believe this narrative that, some of the altcoin projects could could lead to a sensible DeFi kind of a platform where, you could disrupt Wall Street. It's a little bit like the late 1990s, early 2000s in the tech bubble, right? I mean, everybody was just throwing stuff against the wall to see what would stick. Well, after the crash, we saw what the good projects were. My view has always been, maybe there's a dozen interesting projects, maybe it's even less than that, beyond Bitcoin that could help shape sort of this new paradigm called Wall Street. And we do it in a blockchain sort of distributed way. But the more I spend in that space, the less confident I am with that narrative. And I try to find myself coming back. The pendulum is swinging back to sort of Bitcoin only. And maybe we get some layer twos on top of Bitcoin, and maybe we get some other solutions with Lightning and other sort of protocols that utilize Bitcoin in a different way. I don't know. So I'll answer it. I'll end this way. I do think there are still some opportunities to disrupt or make better traditional Wall Street using blockchain technologies that may not be capable on top of Bitcoin. So stable coins would be kind of my first stab at that. And we'll see. I think the jury's out, but for me right now, it's Bitcoin, and then there's everything else. And so I find myself, ironically, having run a digital assets hedge fund where we were playing in that whole space, migrating people back to just Bitcoin, right? Because it's the thing that matters most. And it's the thing that is the most decentralized and open and free of control. And so I think that's a big deal. So hopefully that answers your question.
Yeah, there's a thing to call out there that I think Jackson, it's been lost on me coming into the space and kind of back in like 17, and luckily I came into altcoins, but then very quickly you start to look in the first month, you're like, wait, if all of this stuff's valuable, then either none of it is, or like trying to understand what's happening. But I think something that we do with individuals that go down this proverbial rabbit hole and you see Bitcoin for what it's worth, we forget that there's the natural mental model of the world, specifically mapping to technology, that you saw technology grow and then you're always looking for bigger, faster, and you have the Silicon Valley take. And we all kind of like know that. That's where a lot of the energy starts to come. But what happens is, and you just like really articulated well, is when somebody's intellectually curious, that makes sense. And so it goes, and I had to look up, it's Brandolini's law. It's easier to refute BS or expel BS than refute it. It's orders of magnitude. So if everybody's natural like precondition is, well, things get bigger, faster, technological innovations, because while money's a technology, you don't have like money's a different type of technology in the sense that you get it's first mover, it's trends to one, all the things that we know about Bitcoin. So you're not going to naturally, it doesn't have to continue to grow. And you're not thinking about this in money, you're thinking about this in tech terms when net new people come into this space. So the first individuals they usually hear from are individuals that are mapping to that, right? Blockchain and the different layers and the different ways it's going to change finance and DeFi. So that's like telling somebody the sky's gray. That's all they've ever heard. And then you go tell them it's blue. It's just going to take work, because even if it's blue, you told everything they known it's gray. And so I think this is the standard of what we see with individuals that come into this space. And it takes somebody that's super intellectually honest and curious to take a step back and wonder what's happening. And I think that's just like a helpful framework for like what happens here. And it's not anybody's fault. It's just the way that the market has designed traditional tech and the framework for investing, that you look at digital assets and it's tech, it's not money. And that's where you end up with the hard sell and having to go back to where you're effectively at, as Bitcoin's a store of value and these other things are venture bets at best.
Yeah, I think you and I offline may have talked about this. Maybe it was Jackson. I find myself going back to sound money principles time and time again. And, I went to business school, took a lot of economics in school, worked on Wall Street for 17 plus years. I never learned sound money principles. And, it wasn't until I got into Bitcoin that I understood things like scarcity and portability and, fungibility and those things, and what makes something a store of value, or what makes something a unit of account or a currency, right? And so, I find myself having to go back and re-educate folks on some of these principles. And they're like, oh my gosh, I never thought of it that way. And so as you sort of overlay that on to the alt space, I mean, they don't check the box, right? And so maybe the alt space comes up with some interesting tech that solves some problems for Wall Street, maybe. But in terms of store of value and those types of things that we really care about money and unit of accounts, Bitcoin is the only answer. And again, it's probably worth saying this, but I'm a huge fan of the US dollar. I don't want to see the US dollar be disrupted from, its reserve asset of the world status. I think, and Sailor's talked about this and others have talked about this, Bitcoin can make it stronger, right? Competition's good. And the other thing I want to say, Michael, too, is for years, I heard this almost every day from institutional investors as I talk to them. They would say something like this: I love blockchain, but I hate Bitcoin. And so clearly they've heard the FUD, right? The mainstream media forever was just, berating Bitcoin. And what's really interesting about that statement, if you really understand Bitcoin, it is you can't have one without the other, right? It's a bit like saying, I love flying on jets, but I hate jet engines, right? You can't separate those two. You need one, to go with the other. And so, there's just this massive misunderstanding or lack of education around Bitcoin. And so for me, bringing it back full circle, starting with sound money principles has really helped. And it puts it in a framework that takes it out of price go up and in a framework that I think people can kind of grasp and understand, especially as the US is just printing money, right? I mean, it's crazy. And so, I think that's been a really nice narrative.
Yeah, I agree, Bob. One thing we've talked about on this show is that it's a great way to contextualize the opportunity Bitcoin versus digital assets if you just say that Bitcoin is the digital asset market. Because it's 60% dominance. I think X stable coins, it's closer to 70%.
Yep.
And so you don't see this in other asset classes where there's one asset that is overwhelming majority of the asset class.
Right.
I think the only parallel I could think of is in precious metals. Gold is by far the largest portion of that asset class. And if in your background, a lot of institutional allocators don't touch precious metals. They may invest in gold on the margin, like here and there, but it's really not an asset class that has been institutionally allocated to. And so you think of silver or palladium, these other precious metals, these are like retail markets, and then they have industrial uses as well. I think it's a great way just in conversation when you're speaking with, or when I speak with allocators and we need to level set, well, it's like Bitcoin really is the market here, and here's why. One thing I wanted to get into, Bob, is I want to dive more into the work that you're doing at CactusPEAK and your institutional background. I said at the start of the show, I really didn't think that Bitcoin was ready for prime time with institutional adoption until the past year or so. And that was because the administration wasn't friendly to it. It was still the media was attacking Bitcoin. There was all this obfuscation about what Bitcoin actually was. And then there were not really investment solutions to participate in the asset class. Investors really had to be intentional and seek them out and maybe work with a fund like yours. But on the margin, it wasn't accessible to the public. There were maybe some vehicles out there for accredited institutional investors, but we have only really scratched the surface. So I'm curious, before getting into the work that you're doing, could you just level set in terms of where you think institutional adoption is today, maybe versus where it was when you started in this business?
Yeah. When I started back in 2019, I would argue there were very little institutional investors. In fact, I don't even think the Ivies were in at that point, if I remember correctly. And so it was, it was a pipe dream, for those of us in the space in terms of institutions deploying capital into Bitcoin. I think it's helpful to sort of carve up the institutional investors for a second. I kind of think of them in two major buckets. You have the endowments, the pensions, the sovereigns in one bucket. And then you have sort of the asset management side of things like MicroStrategy, for example, or BlackRock, or other big institutional investors, fund managers allocating a portion of their hedge fund into Bitcoin, those types of institutional investors. I think that latter group has been involved for a while now, but it's not in big allocations. I think the former group, the sovereigns, the my old shop in Michigan, call state treasurers, endowments. The endowments, some endowments are in, so maybe it's 5% of the endowments are in. Maybe that's a big number. I don't know. They are. I think they're going to be late to the game. And it's not that they don't want to, per se. I think it's how they're structured and how their asset allocation models are built, and the gatekeepers to those decision makers are not, in my opinion, fully embracing Bitcoin yet. So those would be the consultants. So a lot of the institutional world is controlled by the consultant world because and oftentimes these big institutions have multiple consultants, right? They'll have one for the investment board and then they'll have one for the investment team. So then you have sort of two competing sort of think tanks advising a particular pension. And just to get anything new and exciting into those allocations, basically takes an act of God. I mean, I lived that for a long time and we were pretty good at it. But, in our case, from start to finish, if we got something done in 6 months, I mean, that was really fast. And so, I think education has to happen, especially on the institutions, because they don't even know what Bitcoin is and or where to put it in terms of an allocation inside their portfolio. And typically that is a really hard math problem for them to solve. Do I put it in fixed income? Do I put it in cash? Do I put it in, is it VC? Is it a commodity? Like, that is kind of mind blowing for people because they're used to having sort of this, programmatic sort of, it goes in this slot, it goes in this slot kind of an allocation model. And Bitcoin disrupts all that, right? And the joke is you could probably put Bitcoin in all those categories and be right and justify it. So it's a really hard decision for institutions to do it, sort of on that side. Back to kind of the Wall Street institutions, I think where that's going to grow is, it's tough to create alpha, right? It's everybody's so benchmark dependent. And it's really hard in an active strategy to differentiate yourself from everybody else that's running the same strategy. Bitcoin has become that differentiator. And so as people start to add allocations to their portfolios or their hedge funds or their fixed income products, right, Bitcoin is going to be that differentiator that helps them outperform their peer group. And that will have a snowball effect. And so I think that's where you're going to see most of the institutional adoption first. And then I think, the other guys will follow.
I think that's a great recap. Appreciate you running through that. I think there's also a core notion of the interest in Bitcoin. It's like, for the majority of the market, there is some interest, right? They've heard of it.
Oh, yeah.
They want to know. But the reality is, in their mind, there's always that barrier. It will never reach outside of speculative interest. So then that's naturally going to put it on a priority list very short or very long, because it's just like, this is always going to be a speculative asset. And there's certain areas of a portfolio that you would allocate to something like that. And so to do all the work and the stigma, the this stigma that's been with it. Now it's starting to be destigmatized. So then naturally you'll get more people interested. Yeah. But going to your, I'm curious because I'm sure Jackson has some thoughts on what you shared, is your relationship with the consultants, because it's something that I think is fascinating, but B, enough of the market doesn't know that they're effectively gatekeepers. I don't know if that's a fair attribution for endowments, pensions, and other institutional investors. And it was always fascinating to me because I likened it, and maybe this isn't fair, but it's, I think, directionally right. In my mind, it's like if Michael Jordan was giving his shooting coach the ability to play the game for him. Like, it's just a very odd thing for you to sit and your benchmark, your whole livelihood is tied to the pension and endowment success and hurdle rates that you're achieving. And at the end of this day, you have this third party, right? Because it's still not your money, but you're a fiduciary, you're managing it. And we all know managing your money versus being a fiduciary is still different. When it's your pocket, like, it's the thing we run into on third party custody. It's like when it's somebody else's money, you're fine with leaving it there. But for individuals, they really have to get to the brass tacks of how they think about the underlying. The next layer to that is to take yourself out of that position or hand it off to a third party that's going to validate or bring things to you. Is something that I don't think the majority of the market knows sits in between institutional investors and making allocations.
Yeah, it absolutely sits there. And it's we talk a lot about, intermediaries in Bitcoin, right? So the pensions prefer to have an intermediary that sit between them and their investments because it's CYA, right? It's another layer of protection for the fiduciaries that sits in between them and their end clients. And I get it, right? I get it. And so I can just talk about my own experience, and this was not the case. We were a little edgy, which was a good thing, in that if there was something that we wanted to do, we could go to the consultant, and we did. I guess the other thing I should say is we didn't use a broad-based consultant over the whole entire pension. We just used it in certain asset classes, like private equity, for example. So let's say that there was something inside private equity that we really wanted to do and the consultant was not on board. We could write a report and ask the consultant to review and approve. But again, that's another layer of process that you have to go through and approval to get something done. And so, those are not cheap and they're not timely. And so, that's why I think, the pension, that the pension endowment, maybe not the endowment side, they're a little bit more free, but the pensions and the sovereigns, it can be a very copycat world, because once somebody does the work, you never want to be the first mover or maybe even the second mover. But once you get sort of herd mentality going, everybody jumps in. And I do think that will happen with Bitcoin eventually. And maybe it starts with the states. Maybe, I don't know. I mean, we've worked very closely with a state who wanted Bitcoin on their balance sheet. He's a Bitcoiner, and through political reasons, didn't get it done. And so there is a desire to have this done. I just don't know which shoe's going to drop first. And then you're going to see multiple shoes drop. And then I think you're going to see that copycat sort of program. And then you're going to get the consultants on board, right? And all of a sudden, all the consultants are going to have an opinion. And that's how it goes. I mean, that's just the institutional space. And so, I'm optimistic. Michael, I have not spent any time getting in front of the consultants. I've tried. They have to be incentivized to look at Bitcoin and recommend it. And that incentive generally comes from, the institutional space that they serve. And according to them, this was as a couple of years ago, according to them, that interest wasn't there. It's like Larry Fink sitting on CNBC and saying, no, there's no demand for Bitcoin. We're not seeing it, right? Yeah. We manage over $1 trillion and there's no demand for Bitcoin, right? Like we all knew that was a lie, but it is what it is.
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
Just something to call out, because I think you'll find fascinating. We haven't spent a ton of time, but we have had our fair share of conversations. We worked with the first UK pensions on an allocation, and then had the conversations not go as favorable in here in the US. And it's like a chicken or egg thing, and it ties back to the beginning of the conversation around generally individuals, intermediaries conflate Bitcoin and digital assets. We see this in the RIA space when you outsource compliance and everyone thinks everything's a security when Bitcoin's clearly a commodity, and then that opens up whole can of worms on why they have to jump through hoops when in reality they don't. On the RIA side, similarly with the pensions and consultants, everything looks like effectively a potential volatile Ponzi. So they're not able to differentiate Bitcoin versus the rest. And then that's the precluder, like the thing that keeps you from the table. Then once you get to the table is the opposite that happens, where you naturally, because we've had both circumstances where now you see where I'm going with this, like you have a conversation and you're telling them Bitcoin's the thing. And they're like, wait, no. We know all diversification. But like, it makes zero sense because everyone there is selling them everything under the sun in baskets, to your point, ETF products that have top 10 market weighted. So it's this inertia that pushes from each side that keeps a lot of this adoption and understanding from really reaching the surface level.
Yeah, I think that's completely fair. And the UK has always been, well, not always, around Bitcoin and digital assets, the UK has been ahead of the curve relative to the US, in my opinion. And maybe with the Trump administration, that's changing, right? Like I fully believe we are going to get reasonable regulation this year, and it probably starts with stablecoins. And so, I think that will be a huge boon to institutional investors coming into the space, because here's the reality, guys. Like, as institutions, they're not going to do anything unless they know what the playbook is, right? So, you're standing on the sidelines and you've got a playbook and it's blank. I'm not going to do anything. What does Wall Street hate more than anything? It's uncertainty. And so, Wall Street's not going to do anything unless they know what the rules are. And so just a reasonable framework of regulation in terms of how to operate is going to release, I think, a huge wave of education and interest in Bitcoin and stables. So we'll see if we get that, but I'm optimistic.
Bob, when we were talking a little bit about your background earlier, we talked about the experience you had within the pension fund, and you mentioned how there was a lot of allocations to alternative investments, illiquid investments. And as I understand it, there's a need for that because the liabilities in some cases at some pensions are growing faster than the assets. Correct. So naturally, then they're looking further out into the risk curve to find opportunities to invest their capital into asset classes that will hopefully outpace those liabilities.
Yeah.
And so pensions will have to adopt Bitcoin as far as I'm concerned or understand it, because Bitcoin is one of the few asset classes that actually outpaces the rate of debasement. Do you think that, do you agree with that? And then B, how would you think about articulating this to pensions, endowments, foundations? Let's maybe stick to pensions, but how would you think about articulating this concept if they want to actually preserve and have the capital available for the obligations down the road?
Yeah, and I love that discussion, because if you think about a pension and their hurdle rate of 7.5%, 8%, so collectively their portfolio has to hit that on an annual basis. Otherwise, their unfunded liability decreases, right? If they can do a 10 or a 12, their unfunded liability improves. Most of those allocators, most of those pensions probably live in an unfunded situation. And as rates are low, it gets really, really difficult for a pension, which typically a 60-40 traditional, equity to the fixed income allocation. When rates are at zero, you're basically getting 0 out of 40% of your portfolio. And so what's happened over the last 5-10 years is that as a pension, you really have to chase return, i.e. increase risk. And it's at the expense of the liquidity of your portfolio. So you see this shift to illiquid assets, private equity, real estate, VC, all of those things. And the problem with that is, liquidity always rules, right? And so what's really interesting about Bitcoin is that you could have an extremely liquid asset on the portfolio, on your balance sheet and your portfolio allocation. And what's its 10-year average return? It's like it's in the 120, 140 range, right? And I think that continues. Maybe those returns come down a little bit over time, but that's going to have to be the math problem, or the solution to the math problem is going to have to be some sort of Bitcoin allocation that helps you improve liquidity and give you an asset, as Larry thinks. I don't know if I believe Larry, completely here, but it's more of a risk off asset, but yet it performs really well and serves as a really interesting ballast to your portfolio. We've just got to get the institutional space there. I just don't think they're there yet. So it'll come. We need guys like, the three of us continuing to pound the table and having these conversations with folks. And it'll happen over time. But I think it's going to be, Bitcoin is so hard to understand, right? It's like learning a new language. And for somebody to, I live this, there's career risk, right? It's, if you screw it up, you get fired, right? And if you're making, you're not making Wall Street money when you're at a pension. And so your obligation is to not screw things up. And so right now, Bitcoin feels a little edgy for a lot of people when actually it's probably the safe play. So we've just got to change that narrative in people's minds and continue to sort of pound the table on what Bitcoin is and how it can serve a portfolio.
Yeah, I totally agree. It's all about liquidity. It was something that was eye-opening for me in 2020. And we could save the details of that. But one thing I'm curious to hear your thoughts on is we mentioned the money spigot and the idea of not wanting to fight the Fed in an institutional portfolio. And so is that component sounds like it was widely understood among your colleagues and peer group in terms of don't fight the Fed, be long asset classes, et cetera. But it seems that there's still a gap in fully understanding just the importance of global liquidity and zero interest rate policy in how that drives asset classes across the board. Why is that the case? Like, if you can understand the first part, why don't you think more people understand that liquidity is driving things here and Bitcoin is really the best investment in that paradigm?
And the boomers weren't geniuses from holding 20, rental houses, and they all went up every year.
Yeah, I don't think, it's baffling to me, frankly, and maybe it's because I'm a Bitcoiner that I can understand it to some degree, but I don't think many people connect M2 supply, USD debasement, and connect that to how risk assets do and or the equity market does, right? It's sort of a false, it creates a false narrative in that, but my housing price is going up, 10% a year. Well, maybe, but your currency that you live off of is going down 8% a year. Like, they don't, for whatever reason, there's just this disconnect between two sides of the same coin. And, I use a chart M2, supply, like a lot of people do. And, the correlation with risk assets, and the dollar debasement, right? It's going to continue. And I think, this is a fair number. It was about 35% of our LPs at the hedge fund at the time got into Bitcoin, and they couldn't really articulate it. So this is conjecture on my part, but it basically went like this. I just know I need to be in Bitcoin because I want to get out or away or hedge sort of this broken system. And I can't quite identify why it's broken. All I know is I feel like I'm a high net worth individual, but I feel poorer every year. And that's a real feeling that a lot of people have. And it's because their purchasing power is continually getting eroded, right? And so Bitcoin preserves that and protects against that. And I just don't think, Jackson, people are connecting those dots in terms of asset growth in portfolios.
Bob, I think you'll appreciate this because I think this is how I finally got my mother-in-law. Was after years and years of these conversations, she had retired, and it was exactly that. It's that your retirement, whatever you thought you had when she retired 2 or 3 years ago, you feel it every year when you pay for vacations and you're paying for all these things. It's increasing while your return profile, which your financial advisor is providing, is not keeping up with it. So whatever you thought you're going to have in 20 or 30 years may not actually be that. And I think that scared her.
Yeah.
And it ties into the scarce assets component of this podcast because there's a notion of equities, bonds, and a lot of things, a lot of assets inflated for monetary properties or their proxy monetary properties. And going back to, I think as individuals that have a long Bitcoin bias, I think we sometimes underestimate that gold as well will be sitting next to Bitcoin for much longer than we all thought for a number of reasons. And so I just think that that's inherent into this. It's like when you look at the value of these assets and see the multiples on them versus their like utility value. Real estate's a great one, but also equities. You can start to like go back to first principles of like what gives things value and the scarcity component of gold and Bitcoin. I think we're going to see a renaissance of like individuals starting, and it won't be like gold bars. It'll be like third parties that build digital type solutions that can reduce the counterparty risk while also letting individuals not DCA, but get their access to maybe 10 to 30% of their portfolio in a way that they know is sound and not paper, but also shields them from the volatility with the equity and bond market.
I agree. And Jackson, you brought this up earlier, the gold bugs, in the institutional space kind of get laughed at. And it's always been baffling. I've always been a gold bug. So maybe that helped me in terms of understanding Bitcoin to some degree when I started researching it, in 2018, early 19. And so, but you're right. Like most institutional investors do not own physical gold. And so, in fact, one of the things that we did at the hedge fund in our prospectus is we allowed ourselves to buy physical gold, vaulted physical gold, because we wanted an off ramp. Like if the world literally fell apart, it was Bitcoin. And just in case Bitcoin's liquidity dries up or went away, we were like, we're going to buy gold, physical gold. And that just makes sense to me. So, but yeah, I agree with you, Michael. I think there's going to be a shift to gold as well, especially if, again, what's the gold market cap? Do we even know? I mean, I think estimates are 18 trillion, somewhere between 18 and 20 trillion today, but we don't know the answer to that, right? So, if Trump gets his way and we start auditing gold reserves around the world, it better come up on the screws of between 18 and 20 million, or we're going to have a problem in gold. And I think there's going to be, I think we all know intuitively there's way more paper gold out there than there is physical gold. And that dynamic could be very problematic for all those people that hold paper gold, right? So we'll see what happens.
Yeah, I think the market, it all goes back to first principles. And when it comes down to a sovereign, if you have certain exports, right, that you produce and you naturally need to sell them for something to import what you need, you're going to need something that can't be debased, right? Yeah. And that's ultimately where sovereigns are made up of individuals. Individuals also have to protect their purchasing power. I can see how gold was missed for longer than Bitcoin, just because gold, it has been kind of historically the wrong trade for long enough. Like you could be in equities and bonds and outperform. Now I think that narrative's changing.
Sure.
One thing that's super fascinating and it's ironic is what you said in the beginning and said throughout this about fighting the Fed. If you really think about it, like not actually buying Bitcoin is fighting the Fed, because if we agree that all assets are a proxy for M2 and Bitcoin is the fastest horse. Well, that if they're not going to stop printing Bitcoin, stop printing dollars, then Bitcoin's the fastest horse. And it ties into, like, I think most institutional investors don't even know there's only 21 million.
Yeah.
Like, most people don't even know there's 21 million Bitcoin. And so, like, once that scarcity component lives up, then you can actually start to, like, underwrite it. But it's just fascinating that, like, what has kept them away is also the value prop.
Yeah, I think that's right. And you know, again, I'm almost embarrassed these days when I talk to somebody, and you know, I've been doing this for a long time. I've done thousands of meetings on Bitcoin, and you understand pretty quickly when somebody does not understand Bitcoin's foundational principles. And I'm always embarrassed, and I should not be embarrassed, but I'm always embarrassed to take people back and just explain what Bitcoin is, because they don't even know it's a protocol layer of the internet and what a protocol layer is. Like, they don't understand that the magic of Bitcoin is peer-to-peer exchange of value through this protocol. They don't get that. And 99% of the time, people are like, oh, I had no idea. Like, no idea. And they think, the other thing that they always think is you have to buy one Bitcoin. And so there's, you know, I feel like, as somebody who's been in this space for 6 years, like, I've made a lot of progress. But collectively, we've made a lot of progress. I don't know if we've made all that much progress. You know, what is global adoption? I don't know if you guys have a number on that. Is it 20%? Is it less than 20%? You know, I fully believe, you know, Bitcoin is riding on the internet adoption curve. So that's going to take us to 85, 90% adoption at some point in the future. So yeah, I guess my point is we're early.
I know how to solve for this. We need to establish a crypto exchange. And what we do is we just sell sats.
Yeah.
Can you imagine, like, if somebody spun up a DCA and it was just like you're buying sats? Anyway, Jackson, I know you want to jump in.
Yeah. Yeah, Bob, one thing I was curious about is, so it's like, are we making progress? Are we not? I would argue, you know, as a whole, we're trending in the right direction, but I totally agree with you. Just with conversations with institutional investors, we're still very early in terms of them developing a thesis and understanding of the asset class. Yeah. But then you do have on the margins very sophisticated people within registered investment advisors, family offices, on the traditional institutional side as well. I am curious, like, what you found to resonate or maybe not resonate in those conversations as you're looking to position Bitcoin as part of a portfolio. You'd mentioned you go to the M2 graph in some cases. You'd mentioned the challenges with trying to fit Bitcoin into one of these existing buckets. I mean, I think the three of us would agree that Bitcoin is its own bucket, right? You know, it should stand alone in terms of how to think about it from an allocation perspective. But, like, what is working in these conversations that you have and what's not? And then maybe if you could provide context too on who are you mostly speaking with these days with CactusPEAK? Where are you focusing your time?
Yeah, so our focus, so let me we didn't answer that question before. I'm sorry, Jackson. So CactusPEAK, my idea around CactusPEAK is, here's the premise. The premise is that there's this massive gap that sits between traditional finance. So let's include everybody in traditional finance, all the institutional investors, so RIAs, wealth managers, everybody, and Bitcoiners, right? And the gap is super wide. And, you know, we've been talking about this for the whole show. So my idea was to be sort of an evangelist, step into that gap, fill it, educate people, and basically solve the problems that they're trying to solve for, which is, as of January of last year, year and a half ago, or January of last year, when the ETFs emerged, I think even though that it was forecast and we knew they were coming for a while, most RIAs were still trashing it because they didn't know how to, they didn't have it to sell, right? They didn't have a product that they could sell to their clients. And so they picked up on the FUD narrative, and, you know, because their clients are asking for it, they're like, no, it's rat poison. And so we don't like Bitcoin. All of a sudden there's 11 ETFs and they're like, uh-oh, we've been trashing this asset for years. Now we have to completely shift our dynamic to now we like it and now we're selling it into your portfolio and this is why. They haven't figured that out yet. And so what's happening, and I've talked to a lot of RIAs where this is the case, their clients are the ones forcing the issue. And so I've got a good friend who's an RIA, and he's like, no, Bob, I have to be proactive. I have to talk about it to everybody, because what I don't want to do is I don't want to lose my client to some other registered investment advisor who has a Bitcoin solution and I didn't provide them access. And so, but that's only the first decision. And so they don't even know how to educate their clients. And so, education is key. And then how do I get Bitcoin is the next big hurdle that I'm trying to solve for. And, I think on this podcast, we probably all would agree that the ETFs are not the greatest structure for Bitcoin, but it can be a really good and interesting first option for people. But I think as they get involved in Bitcoin through the ETF, they quickly realize, oh, wait, this is a bear asset. I only have price exposure. I want to own the thing and control the thing, because that's why you Bitcoin, right? Like, it's a bear asset. You want to hold and control it. So helping people through that trajectory or that path, that roadmap to own and control Bitcoin. And then as various capabilities emerge, help family offices, wealth managers, single family offices participate in, like one of the new products that you guys are offering, which is, borrowing and lending off your Bitcoin, right? That's a great transition to having somebody own an asset and then use that asset. And so that's kind of what I'm trying to do at CactusPEAK, is step in that gap and help people through that life cycle. And so our target audience really is wealth managers, single family offices, multifamily offices, the wealth space, because I think they're the ones that are feeling the most pressure post the adoption of the 11 Bitcoin ETFs. And so just to get them comfortable talking about the space is battle number one, and where I spend a lot of my time. Did I answer your question, Jackson? Sorry.
You did. Yeah, no, that was
okay.
That was a great answer, Bob. We see a lot of that at Onramp as well, where the clients are forcing the issue. And for any RIAs or any folks that participate in the wealth industry, one thing to pay attention to, and Bob, this will be relevant for your discussions too, is that 70% of the Bitcoin is held with individuals. And so naturally those individuals, they become wealthier over time as Bitcoin appreciates. A lot of them may have financial planners that are not really cutting it as it relates to Bitcoin planning and investment management as part of that broader portfolio. A lot, and probably even more so, of these people do not have relationships with financial advisors today and will likely need them in some capacity in the future. And so there's such an opportunity. And yeah, Michael pulled up the slide here, 70% of Bitcoin held by individuals. Incredible opportunity for traditional financial planning shops, RIAs, to be experts on Bitcoin and understand from a first principles basis how you can help your clients that already own it, but then increasingly want to purchase it as well.
Yeah, there's so much embedded sophistication and market knowledge in what Bob shared and what his goals of his firm to do. And that's why we had him on the pod and where we hit it off on the conversation, because there's a lot of things that he relayed there in the sense of, we all know if you hold the underlying why the ETF is not the most sophisticated product in the market, but at the same point to hold the other side of that in your head, that it's still valuable to get people as an on-ramp, their first exposure, let them go down. But then through that knowledge, going to the market and being able to explain that and articulate it to RIAs and banks and other third parties, because they have multiple things that they're battling or trying to figure out, when risk is one of the main ones. Everyone's seen the ICOs and the bubbles and the Ponzi's happen. So they're concerned with that, but they're also concerned with differentiation, not being disintermediated by the large institutions, which they've historically been done. And then also, Jackson's point is probably the biggest opportunity in asymmetry, is that the market, specifically TradFi and institutions, are building products for other institutions, not for the individuals. And because this was an emergent asset class and the individuals not only hold the majority of Bitcoin, but will continue to hold a large percentage of it, because by just the nature of they can move faster than everyone else because it's a consensus of one versus all these other institutions having to go through the bureaucracy around exposure. How do they go from an ETF to multi-institution custody or a different type of fund? They're always going to be able to move first, and they're around the longest. So they're going to drive the market and what's needed. There's a huge opportunity for a land grab. And it's not everyone's going to get an equal portion, because we've seen this anecdotally from the RA specifically that say the second they put a favorable tint towards Bitcoin, just saying that like, hey, it's okay, we have some education, whatever it might be, they've increased their AUM in the first 12 to 24 months from anywhere from 2 to 5x. And that's the same opportunity from the challenger community bank side of things. But the reality is not enough people are telling this story and explaining it, because the right people, when they hear it, they're like, oh my God, like this is right. I can take away all the risk that's embedded in digital assets by not like opening it up to serving all these different products. I can think about third-party risk in the right way and have a singular view on a singular asset, i.e. Bitcoin, as a proxy for the digital asset space. And now you start to take away the risk while also giving the opportunity and taking it away from speculative to store of value. And so we're incredibly early, but also you can start to see like through the fog how this all plays out. And the people that stay down the narrow path and really focus on a singular view are going, because this has happened the past 15 years. People have gotten blown up and they're like, people pick up the scraps. This where Bitco's really done things the right way. And it had a lot of market consolidation, my previous firm. It's what we're aiming to do here, is have a dedicated voice and view on Bitcoin and then go very deep on that asset.
Yeah, that's really well said, Michael. And let me rephrase it this way. There's a huge gap between understanding Bitcoin to buying the ETF. Then there's another huge gap between, oh wait, I need to own and control this Bitcoin. How do I custody it? Right? That's a whole nother topic of conversation. It's very complex. And there's not a real good straightforward answer, right? There's a lot of variables that you can go through, a matrix, if you will, to sort of, how am I going to custody this asset? Where I found you guys is, because of your multi-institutional custody product. And, this is not a commercial for you guys, but it's a product that is needed, especially for guys like me, because I don't want to be a signatory on, a multi-sig structure for, a bunch of clients, right? I want to off-source that to a third party who's built a better mousetrap than I can provide. And so, to your point, Michael, these products, these solutions are coming to the market now. We're maturing in such a way that I have a lot of confidence to put clients in own and control Bitcoin through a particular structure that's protected and distributed. That's a big deal, right? And that gives a lot of people comfort, because as we think about institutions, what is their default mechanism around custody? It's, I want to give it all to Northern Trust. I want to give it all to Bank of New York Mellon. I want to give it all to Fidelity, right? It's a scale game. And I trust these firms to aggregate all my assets, not only my assets, but everybody else's assets. So they're custodying trillions of dollars of assets. So there's some security around that. On Bitcoin, it's the opposite, right? You don't want to create honeypots by scaling everybody into Coinbase, for example. And people just don't understand that. And so, the gap between I want to own and control my own Bitcoin and then how should I custody it is a big one. And it takes a lot of people time to get there. And frankly, I don't even know if they're fully there yet. And so, yeah, well said by you. And I think congrats on what you guys are building, because I think it's going to open some doors for some people who have larger pools of capital that will require third-party custody like what you guys have built.
Yeah, and the reason where we get really excited about it is we talked about this offline about like at the end of the day, our goal is to democratize the ability to get meaningful exposure to Bitcoin, because it's historically been very hard for individuals. Everyone, and it goes to your question about the amount of adoption. This is like going to first principles again. If custody isn't figured out, and we'd make the case that it hasn't historically been figured out by the loss of assets in the past 15 years, it's embedded in people's it's embedded in an individual's apprehension to ever looking at this asset, even if they say one thing, because everyone knows in sales, right? What the first objection is really isn't the true one. There's one behind it. And so when people say Ponzi or whatever, snake oil, what they're really insinuating is, I don't even know how I would do this because it would end up by North Korean hackers or it end up in a UK landfill on a zip drive.
Yep.
And so once you can take that out, in the same way, if somebody was trying to get online to send an email, that I have to set up a server and do all this, and you just know it's going to work, i.e. the browser in 1995 and the amount of users that were able to come in, or I just know it's bulletproof via not only the underlying custodian, but the counterparty and insurance, then you take that away and now you can start to get individuals step in. And then once people step in, that's the first step into earnestly looking at like, well, what is this? Because now I'm in favor because I have a little bit of exposure. And we all know from there, it just increases that amount of, but the other side of increasing is you have to know the fundamentals are always going to be there around the asset. You won't wake up and the asset's gone. And so that's where we get really excited about this model. Our chief strategy officer says until multi-institution existed, there was never not a single point of failure, because whether it was a third-party custodian or yourself managing the keys, you were the single point of failure. Now that doesn't exist.
Yeah, no, I totally agree. If I get hit by a bus today, I've got problems, right? And so, solutions that solve that problem are going to be very valuable.
Hey, Bob, to wrap up here, I have a question for you. Could you give maybe one thing you're paying attention to on the investment side, i.e., what are some metrics or data that you're paying attention to kind of inform your outlook for Bitcoin in 2025 and beyond on the investment side? And then on like the regulatory political side, just any thoughts? We didn't cover it a bunch. Just any thoughts on like the SBR action or things that you'd want to pay attention to for the rest of the year? Good or bad?
I'm gonna be very simple as it relates to Bitcoin on the investment side. I think people should just be dollar cost averaging in, period, end of story. And I think a lot of people can get, especially if you're on X, right? You can get tied into all the technical traders who are looking at the EMA ribbon or the 200-day moving average or the 200-week moving average or whatever it's doing on a technical basis. That's not for everybody. I think about my dad. My dad is in his 80s and he's been DCAing into Bitcoin for 7 years now. And it's religious. It's every Monday, boom, he's buying Bitcoin, right? That is really the best way to do it. We didn't talk about cyclicality around Bitcoin. You could, if you were a professional investor or an allocator, trying to do something around the cyclicality, but I still think that's a bit of semantics and it's just better to dollar cost average in. In terms of Jackson, sort of the macro stuff, I think I'm actually conflicted. Maybe we should have talked about this. I'm actually somewhat conflicted about the strategic Bitcoin reserve. I think it's a good idea. I think the US should do it. I kind of view Bitcoin as people's money, not government money. So I have a little bit of a conflict with government buying the people's money, but it will be good for price. It'll be good for adoption, and it will be good that the US is the leader in Bitcoin, because I think that will help adoption globally. I watched Michael Saylor's recent address at the Bitcoin Institute. We were talking about things that don't help institutional investors, Jackson. I don't think it helps to trash the dollar. And I don't think it helps to be overly dramatic and boastful about what Bitcoin is. And like a lot of the things that like Michael Saylor does, right? That institutional investors are like, what is this guy smoking, right? And I love Michael Saylor. But there's a lot of things, I don't think that's the right path for institutional adoption. So listen, Bitcoin is all about adoption, right? It's exponential growth of a network. And so what matters to me is that exponential growth curve. And as long as we start seeing that continue to go up, which I think it will, this is Web 3.0, right? We have 3 dimensions of the internet now, and we've got Bitcoin. And as long as that exponential growth continues and we get adoption, just like we saw the internet, Bitcoin is going to be the best trade for the next 25, 30, 40 years. I sometimes think we overthink it, I guess, is the way that I would sum that up.
I totally agree. Yeah.
We had I won't name him, but a gentleman that spent his whole career in TradFi, sold his hedge fund to a large financial service firm. And he would reference, to your point, they would say, what bucket do you put this in, this product you have? And he got to a point, I think this was after they really scaled to billions of AUM. He's like, I don't care what bucket, you figure it out. Don't make
all
it.
Of them.
It's not,
all
yeah,
of them.
it's not my problem. And I think it ties to your point of like, there's only 21 million. And if there's an infinite amount of dollars, then there's some value to it. And then you can determine what you can underwrite, what the total addressable market for that is.
Yeah.
But it's not a hard trade. It's you call it a common sense test, not an IQ test. Going to your simplifying it.
Yeah, it's economics 101, right? You're dealing with an asset that has a finite supply, and almost 90% of that supply is in circulation today. In 10 years we're going to be at 90%. And it's going to take another 130 years. 140 years for that last 1% to come out. And if adoption continues to grow, that should mean that that's positive for price. And I think the trend continues. I guess I'll end it with this. I don't do price predictions, but I think Bitcoin is pari passu with gold at some point. So that's a 10x from here. Assuming gold's 18 to 20 trillion.
Bob, don't do that. I can't let you do that. You get it's the trap. It's the trap.
It's the trap.
But no, it's the trap in the sense that like gold will move much higher as Bitcoin moves much higher. So like we had this conversation.
I do think gold will go higher too. So maybe that's your point's well taken, Michael. But my point is, I'll say it this way. Bitcoin will be at, 20 trillion in the next 10 to 15 years, something like that. Gold's going to do what gold's going to do. I do think they go up in tandem.
I was smiling, Bob, because
he's going to call me out on it, didn't you, Jackson?
Well, Michael said that his price prediction on the last trade a couple weeks ago, and it was like 750K.
No, I've never done never done a price prediction. After 21 and 22, if anybody was around then, you look at the market and you're hoping for things and you realize you're always going to be let down. So you just got to, yeah,
for sure. And you know what? I would say most of the people that I talk to, some are in it for price, but that's a very few people as a percentage. Most are thinking about Bitcoin the right way in terms of being a lifeboat, being a hedge, being a currency, cross-border payment rail, all those types of things that we know. And so, that makes sense.
Awesome. Well, Bob, where should people reach out to you if they want to get in touch?
Yeah, so you can email me at info@CactusPEAK.io. I'm also on LinkedIn. I think it's Robert Griffin on LinkedIn. And then on X, I'm not a big user of X. I'm trying to get better at that, but it's at 2 Bobby G, BOBBYG.
Awesome. Well, thanks so much for joining us, Bob.
Yeah, I really appreciate it, guys. Thanks for having me. This is great.
Yeah, thanks for coming on.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.